All right. Hello, everybody, and welcome to this week's edition of Selfwealth Live, the technical analysis edition. Sorry, we're a little bit late, just as always. Not as always. We're pretty good, actually, normally. I think we have about a 99% success rate of getting here at 12, don't we, Jace? But just a few technical stuff this morning. That said, we're ready to go with our technical analysis show. Jace, how are you today?
Hey, Rog, I'm good. Looking forward to another show. Looking forward to plenty of interesting stocks from our viewers as always. So, yeah, all pretty good.
Once again, thank you very much for helping us out here, Jason. Thank you for everyone that's coming along with their tickers ready to go for another big show. So if you haven't already been to this show, what we do is we go through our main three indices that we offer at Selfwealth, and that is the Australian market, the US markets, and the Hong Kong markets. Then if there's any general questions, we might try and pop them in the middle. And then the beef of the show is all about having a look at your tickers from a technical perspective, from price analysis and price charts perspective. Once again, looking forward to another big show. There's sort of lots happening in the markets once again and around the world still. So let's get cracking without further ado. Jace, let's have a quick look at that disclaimer, if that's okay, please.
Okay, our disclaimer. So, of course, everything we do today, general commentary only, no personal advice. I'll quickly put on that disclaimer Rog was mentioning. And this just goes through all that. General commentary. I'm not part of Selfwealth Safe. I'm Motion Trader. My details are at the top, licensing and all. And then beneath there, you'll see the Selfwealth licensing and general commentary and all of that important stuff is in that slide.
Of course. Fantastic. All right. So let's get cracking, Jace. Let's have a look at that Aussie market. What's it up to?
Okay. So over to the ASX 200. And we're just starting to see that pullback. Finally, we're getting that pullback in the ASX 200. Prices hit that all-time high last Monday. And then over the last few days, it's been that consolidation starting to develop. I don't think the pullback should come as any great surprise to anyone. The total gain, when you look at the August low and the August high, that's a 4.9% gain in that space. And when you consider that August is historically one of the weaker months, it really has been an exceptional performance over the last month, and then in the months prior to that as well. So what could happen now? Well, even exceptional performances need consolidations, and I think that's what we're seeing now. And given the extent of those gains, we could be looking at possibly a multi-week consolidation where prices, maybe they chop sideways, maybe they pull back a bit. You never know the pathway it's going to take, but consolidations, they can take some time to work through. I think the question for a lot of people here is what should they do in this sort of situation? Do they take profits? Do they hold? Do they get ready to buy a dip? For me, it's a case of continuing to do what's been working, and that is, for me, that's holding winning positions that have been doing well over the last few months and holding those positions for as long as possible. And that's because I know that I could be completely wrong when I talk about a multi-week consolidation, and it's entirely possible that prices quickly resume the upward trend and go on higher. So I don't want to try getting too clever by taking profits, thinking I'm going to be able to buy back in later at a lower level. For me, it's about doing. If something's working, it's about not wanting to bet against it. I want to give this upward trend every chance to keep working. So that's how I play this out. Right now, I think it's more about being mentally prepared for the possibility of either a pullback or a pause in the trend. And Roger, I think it's always important to remember that consolidations they're typically positive, or within an upward trend, they should be a positive thing in that they help make uptrends sustainable. And I think what's really positive about what we've had in this market in recent times is the performance of the equal weight. So this is the ASX 200. Let's have a look at the ASX 200 on an equal weight basis. And when we look at this hasn't even started to pull back as yet. And the equal weight, it struggled to keep pace with the ASX 200 in the lead up to the April correction. So back over this period here, it wasn't really keeping up with the ASX 200. It was the big caps doing most of the work. And now we find that it's actually leading the way. I think the message to take from this is that the rally we've seen over the last month in particular, it's been broad-based, which is often a sign of a healthy market. And I think that indicates that any potential pause or any potential pullback is simply a pause in the trend, not a change in the trend. I'm long the ASX 200. I've got positions across many individual stocks, and I'm happy to stay that way. With prices like we've got these rising moving averages, the 50 and the 100-day moving averages, with prices above those, with price above the moving averages, and of course the moving averages trending upwards, and the equal weight being showing that broad strength. I think the overall trend remains up, and of course, for me, wide trailing stops, because we never know when things will stop working. At some point, there's those larger pullbacks, there's those corrections, there's even trend changes. So trailing stops, it gives you an exit plan for when to ultimately say, look, enough's enough, and you step away. So I use those wide stops to help manage risk, and they also help me stay on these trends when they're in place as they are now.
Yeah. Well, look, I've heard a couple of. This is why we teach what we teach, right? Because we're sort of playing what we see and not what we think too much, right? And I've already heard, and I don't know if you've heard it, Jess, but credible sources such as channels, the ABC and whatnot. Are we in this bubble? Are we in a bubble? It's all about fear. And then there's another expert saying, when people are getting into gold and gold's a hit all-time high, and stock markets are at high, are we in a risk-on or risk-off environment? No one ultimately knows. People are just making calls. Experts are making calls and putting the fear into people sometimes, right? But what we teach is to sort of go with the trend until it's there, right? So and have the confidence to have a plan to exit when it's not, right? So this is what I love. That's why I love what we do, right? So it's fantastic.
Yeah, so we're trying to take the prediction out of it. We're not trying to predict what's going to happen next week or next month, because we don't know. Like I talk about the possibility of consolidation, but ultimately we don't know. So it's not about, and this is a mistake I think people make with a lot of technical analysis, is that they think technical analysis or looking at a chart is about predicting the future. I don't think that's really the case at all. Of course, some people do use it for predicting, and there are lines of technical analysis which is more tilted towards prediction. But the way I'm using it is about understanding the structure of the price action. And I'm looking at the moving averages. I'm looking at the price relative to the moving averages, and then making a probability-based call that the path of least resistance is up until proven otherwise, and then managing risk around that the established trends. So, like I heard people on analysts in mid-May, I think it was, they were talking about, look, this has been a big bounce. It's now time to take profits. And that's what fuels uptrends. So people take profits, and then the market keeps going, and then they buy back in, and the trend continues to feed upon itself. So, rather than making predictions about now it's time to take profits, for me it's about, if the trend's in place, let it run, because trends often go further and last longer than people anticipate. And some go much further, whether this is part of a much larger trend or whether it's almost run its course, we don't know. So let the trend run until you have good reason to think otherwise. And hearing someone on the news say bubble, or people are buying gold, or that's not a reason for me to sell. That's just noise which I really filter out. I don't listen to. I'm listening to the price action through what I can see, not what's appearing in the media.
Fantastic. All right, now that equal weight looks good. Let's have a look at the American markets then, US.
S&P 500. So it edged up to its 20th high, or 20th all-time high for the year on Thursday. and before pulling back slightly on Friday, and there was a holiday on Monday, so we don't have a Monday bar at this point. And the Nasdaq on the other hand, it remains below its all-time high. So prices have generally around the same level they were a couple of weeks ago. So not a great deal of change. At this stage, I'm viewing this as pretty much as a normal pause within a rising trend. The key features I'm watching, again, those rising moving averages, 50 and 100-day moving averages are trending higher, and of course prices above the moving averages. So that's a classic bullish structure. You'll also notice a clear sequence of rising lows over recent months. So that's another bullish marker. I think the potential for consolidation, it is very much there. It's something to be aware of. It's been a rally with only short pauses. So look at these pauses along the way. They've only lasted like a couple of weeks, really, at most, in many cases. And I think the potential for that consolidation is there. I'm also watching the possibility of a bearish wedge. We talked about that last week. Let me just put the lines on it. So a bearish wedge, you link up the lows, and then you link up the highs, and that's a structure called a bearish wedge in technical analysis. Now, it only comes into play if it breaks down, and it hasn't broken down as yet. For that to happen, it would need to break below this lower boundary, and if that were to happen, then I think we could see the S&P 500 come back to maybe down around its August low, which would also involve a retest of these moving averages. But I think any weakness, like should that develop, I think any weakness is likely just to be a consolidation of these most significant gains we've had over the last few months. And remember, we should always expect pullbacks as part of a trend. We shouldn't expect, like this has been exceptional. This isn't a normal trend where it just goes 25, close to 30% in 5 months. That's not normal. Normal is more like where you see those more regular pullbacks to the moving averages. So I think that, just remember that pullbacks are normal and it's part of an uptrend. And most pullbacks don't become major turning points. So don't get too hung up by the term bearish in the word bearish wedge. For me, in this instance, it's a sign that maybe that consolidation is getting close, and during September maybe we do see a retest of the moving averages. So why do I think that a potential pullback would be just a consolidation and not a lasting high? Well, apart from what I've just said about those moving averages continuing to trend higher, another big reason is what's happening in the equal weight. So we looked at the equal weight for the ASX. Let's have a look at the equal weight for the S&P 500. And when we do that, this has been a constructive week. The equal weight hit a new all-time high on Friday about a week ago. And so that took it above the November 2024 previous all-time high. So it's nudged above that. And since then, it's been holding onto its gains. So just look at this. So we had that nice strong rally Friday a week back. And then since then, it's been a shallow consolidation, prices moving sideways. And I think that's positive. I like it when we see strong rallies followed by sideways price action. And that's a sign that, for me, that most of the market is holding firm and it's not losing much ground. I continue to think that it's a case of staying long stocks. Overall structure here remains positive, and until I've got good reason to do otherwise, I want to stay invested, and I want to see if I can see a pullbacks. If a pullback becomes much larger and not what I'd call a survivable pullback, well, I shut down risk. But at this point, I just don't see those reasons to be getting out. Just as we haven't seen those reasons for getting out over the last few months. It's been staying with that trend above moving averages until we get those signs that something else may be happening.
Fantastic. All right. Is similar things happening over in Asia?
Hong Kong going over to the Hang Seng, and the price action remains bullish. Had a pullback last week to the 50-day moving average, and that was followed by a strong rally off it. So that's a good sign, and that's been the pattern over the last 3 months. And you can see these pullbacks to the 50-day moving average have been bought, and we often see this type of price action during an uptrend. It's that classic case of buying the dip, and I think this is when that strategy of buying the dip works well. I want to consider buying when prices pull back to rising moving averages. What I don't want to do, I don't want to consider buying when prices are falling away from declining moving averages. So that's just understanding that structure of the market. It's not about predicting anything. It's about understanding what is it like. Is it summer or winter? Winter's when prices are declining, falling away from declining moving averages. Summer when it's rising above those higher trending moving averages. And the rally, I think, off the 50-day moving average to, the potential now that we're heading off to a new recovery high. All the markers here remain bullish. The rising moving averages, price above the moving averages, and series of rising lows, rising highs. I think it's a case of being positioned for more upside. And just whilst we're here, let's jump over to China, because this has continued to be a market of significant interest, I think. More positive price action through the week. There was a quick decline last Wednesday, and then that was quickly bought. Prices trading back up to around near their highest level since nearly a year, probably in about 11 months. I like that prices are so far holding on to most of their recent gains, and this makes the latest rally different to many of the rallies we've seen in the last year, where we get those strong rallies and then the market just gives all those gains back. Strong rally, give back. Strong rally, give back, etc. This one here is a strong rally and it's holding on to the gains. So I think that's a positive thing. It's a positive thing when the market stops surrendering those gains so quickly. I think the Chinese index now has a clear uptrend in the moving averages, and again, prices above those averages. Both of those are bullish markers. Maybe this pause that we're seeing goes on for a little bit longer around that 15,000 level. If we just compress that, we can see this has been a key technical level over the last few years, over the last decade, really. So maybe there's some more consolidation around this point, but I think this is a market with more upside potential. I'm happy to give this emerging trend both time and room to move and see whether this extends further.
Okay, fantastic. So it's all looking pretty positive at the moment. Thanks, Jen, once again for letting us know that's your favorite show on the market. It's much appreciated. Let's get cracking here with some plenty of tickers to get through here, Jace. So let's get cracking with JJJs, and that's BOE, if that's okay.
Okay, so into Boss Energy. And the uranium stocks, it's interesting things happening. It looks like the uranium price might be trying to start to turn higher again. I was looking at these yesterday. It's for me, it's just a little bit early with this one. There's a lot of technical damage done with this decline, and prices are well below declining moving averages. So this is probably the weaker of the prominent ASX listed uranium plays at the moment. I'd be inclined just to watch this. I'd be inclined not to buy yet and just watch for a bit longer. If somebody wanted to preempt a turnaround, as a general rule, I don't want to buy stocks below declining moving averages. But when we couple that with a broader sector play, maybe you can come up with a case for it. If that were to happen, I'd say, look, if we're bought at current levels, maybe the stop could be below the recent low, which is about 25%. It's not a play for me, but it is one way that it could be speculated on with a clear point of cutting a loss should it not kick higher here. I'd prefer to just watch for the time being, but I think the uranium space is, and I talk about it every Friday in my Friday strategy session. go through the uranium price and often the stocks. And so, yeah, it's that's probably a point to come to if we want to talk more about all the individual stocks.
Okay. Actually, we've got a couple of stocks from Max via email. Can we have a look at FFM, please?
Yeah, it's continued to track these moving averages higher or being above the moving averages. I think there's continued upward trending potential. We never know which trends are going to become like superstar trends and go on, but this has the makings of a trend which is worth looking at. It's above the moving averages. Moving averages are rising. We generally got higher lows along the way. It's I'd be happy staying in this one if I had it. If I particularly liked it, like maybe we get some consolidation while the moving averages catch up now. So this pullback could be a chance to buy, stop back below the 100-day moving average. But yeah, look, it's the makings. I think there's definitely the potential for this trend to extend higher. So I'd be happy staying on board.
Okay, fantastic. Next one is LYL.
Yeah, so we've got the pullback. So is this a basing period over the previous, what's that, eight or so months? Maybe we've got a base in place. It's lifted off, pull back to the averages, another rally back to the averages. It could be a case that this is starting to like step higher. I'd be inclined, if I was in this, I'd be happy staying in it. I could have a stop loss probably comfortably below the 100-day moving average, just to give it that room to move about. If I was looking at getting some on board, I'd probably just, with this pullback at the moment, I'd probably be inclined, if I was thinking about getting on board, see if we get some consolidation sideways and then like another platform develops, and then from there, maybe the rally continues. So I think it's one we could watch with the idea of buying into. It's probably going to find there's support that comes in around about the 100-day moving average. We've got these recent lows, got the previous high. I think this is one with potential upside. I'd be happy to keep it in my portfolio if I had it.
All right, fantastic. Next one's from Rob, BFG, please.
Don't really have a trend at the moment. I had this in my portfolio a while back and earlier this year, and I closed it out. I can't remember exactly when, but it might have been probably around March, April. It just wasn't back below the moving averages. It just wasn't really pushing on. So I'm not in it, but that doesn't mean it's not. It can't make a recovery from here. But at the moment, it still doesn't really have that momentum. It's gone from below the averages to above. The averages look like maybe they're crossing, but I guess the groundwork for a recovery is being put in place with the move above the moving averages. I think the next step now is to establish itself above the moving averages. Consolidate here around the averages, and then break higher. A break above the 27 August high would be a positive. That'd be a potential buy trigger. I think above the 27 August high. For now, I'd be inclined to watch it. If I was already in it, well, I think a break below the mid-August low would be a negative and probably suggest a retest of the lows. So they're probably the two levels to watch. Keep an eye on that low from August and the high from August, and whichever one breaks first could well set up the next round of momentum.
Okay, fantastic. PPS.
It's starting to look like we could be getting some upward momentum in this. Big fall back in 2022. but like, has this now been like a multi-year basing phase? And for those who like technical patterns, you could say there's a left shoulder, there's the head, and there's the right shoulder of a head and shoulders pattern, perhaps, or the cup and saucer pattern. There's there's that rounding cup, and then there's perhaps the handle of the cup. So a couple of old school patterns which suggests the potential for higher levels. I like that it's above the moving averages. Moving averages have turned higher. It's broken above these recent highs. This is a stop I think that could be considered at current levels. Maybe having a stop just back below the late August lows. See whether this latest surge momentum continues. I think there's good upside potential in it. Risk can be managed, so we could say this is an asymmetric entry point around current levels, because we could see a movement back to new highs. We may not also, but there's plenty of upside potential, and we can limit the risk within a workable fashion. So yeah, I'd be happy to consider buying this breakout, and if I'd bought it, I'd be happy holding it and see where it takes us.
Okay, fantastic. Next one's from D Smith. Let's have a look at LOT, LOT.
It's gone through a tough patch below declining moving averages, and like I was saying when we were talking about the what's the Hong Kong market, the Hang Seng, I was saying I don't want to buy dips below declining moving averages. But now that structure might be changing. It's now flipped to above the moving averages. Moving averages are close to crossing. I think for me, it's like it's certainly got the potential that it's like building up a positive structure. The key now for me would be, can it now consolidate above these moving averages? Can we see, like, even the sideways movement, the sideways consolidation while the moving averages catch up is one of those classic signs we often look for. We don't always get it, but when we do, it's a nice setup. So can we get some sort of a corrective formation while the moving averages turn, get some consolidation, then get a secondary break higher? That would be what I'd be looking for an entry. So I'd probably a touch early for me at the moment. If I was, I think if someone's already in it, that's all. That's probably fine, because we can manage our risk with a stop loss. But for me, in terms of getting in, I'd like to see the consolidation first, and then a secondary break, or at least sideways consolidation. Let the moving averages catch up and buy the dip back to the moving averages. So a couple of ways it could be played, and I think it's an interesting stock worth keeping an eye on.
Okay, great. BGL.
It's interesting, isn't it? It's a gold stock which has been in a downtrend. It's so look, it's still in a downtrend. It's got declining moving averages below the moving averages. I wouldn't be in this stock. It has been a stock which has been in the motion trader portfolio in the past, because it was in an upward trending phase last year, but then it broke down. So it's been off the motion trader radar for probably over a year, and it's not a stock I'd have in my portfolio because of that. That it's still on the downtrend. I don't want to preempt a turn of the trend, and also the fact that it's a gold stock and it's in a downtrend when the gold price is in an uptrend. So I want to be in stocks which show relative strength, not relative weakness, and this is showing weakness amongst the gold population. So it's not the gold stock I'd want to be in. It's not to say something can't change and it can't become a star, but it's just not giving us that indication at the moment. So I don't want to get in on and hope something happens. I want to get in because something is happening and we do have upward momentum. At the moment, that's not there. We need to see more price action, like from below the moving average, get above, start to get some upward momentum. That's when I get interested. At the moment, for me, I'd be steering clear.
Okay, fantastic. Let's have a look at David's, please. EL8.
Uranium stock. So it's another interesting one. I bought some of this on this breakout back in June, and then sold it when the price got back down below the moving averages. So my reason for buying was no longer there. Now we have it having another go. It's back above the moving average. The moving averages are turning higher again. I was looking at this earlier, and I was looking at it yesterday thinking, is this one worth getting back into? I haven't done so as yet, but I am watching it. It does have that, like, we could also say, look, is this like a left shoulder, a head and a right shoulder of a head and shoulders formation? Then you draw draw a neckline across there. Like, yeah, it's got signs there that there could be something starting to happen. I'll probably give this a little bit longer before getting back in. If I get back in, I'd like to see it just consolidate, hold it, start to consolidate above the moving averages, and then maybe a secondary break higher. So it probably just needs a little bit more price action for me before getting back in. But I think this is a stock with potential for. I think this is a turnaround potential stock, and we could see a much larger rally develop. But I just wanted a little bit more price action before jumping in myself.
Okay. NMG?
Was that M?
N for Nelly, MG. This one's from Roberto.
Yeah, it's trending in the right direction. Low-priced stock, very low price, 2 cents, but it's it's got that momentum there at the moment. It's above moving averages. It's trending upwards. So if I'd bought this, if I was in this, as a speculative stock, I'd be happy to stay in there. I like that when it's rallied, it's done a good job of holding onto its gains. You can see the shallow consolidation, and you see another shallow consolidation around current levels. Sometimes these lower price stocks, they're prone to being quite spiky, and like you can see, there's a spike rally that quickly collapsed upon itself. It's different price action we're seeing now. It's seeing more building with consolidations, which indicates to me that there's buying interest supporting it on the pullbacks. So I think that's like, it's probably a harder one to buy. Lower price ones generally are. Like, where do you put your stop? Look, maybe 25%. Maybe it could be bought at current levels with a 25% stop. That's probably a pretty decent sort of probably pretty fair risk on 2 cent stock if you can just risk 25%. Often you need a 50% stop because it just moves so much. But because of the low volatility and the consistency in the trend, I think it does lend itself to potentially getting at current levels with that 25% stop. But look, low price stocks, a lot of them don't go on to great medium to longer term success, but some do. Open mind and see what happens with it.
Okay, next one is MEI, M for Mary, MEI.
Again, is this the early stages of a recovery? It's got that potential there. If I had something, I'd bought this earlier, sort of break high. It had nice structure in that, below the averages to above, had that sideways movement above the moving averages. That's the sort of price action I'd like to see in some of the other stocks we've spoken about today, where I've said I just need a bit more price action. Where you get that consolidation above the moving averages, and then you get like a secondary break. So had I been buying it around that time, I'd probably still be okay holding in my portfolio for now. I think the low from late August is a key point. A break below there, I'd be just saying, look, this isn't working, I'm getting out. In terms of would I get into it now, I'd probably like to buy maybe a break, buy into some momentum. So maybe buying it at a higher level, maybe even a break up the highs from last week. If someone did want to sort of preempt the break higher, buying at current levels, 27% down to below that recent low, that's where I'd put a stop. But yeah, ideally, I'd be saying I'd want to buy a breakout. It could even be a break of the 19 August high. Could be a zigzag corrective structure. So if it can hold here and then start to move higher, something could develop. So interesting stock. I'd be open to having it in my portfolio.
Okay, fantastic. One from Matt is WOW.
Yeah, it's struggled for a while. It's had brief periods where it looked like maybe it was going to start to recover, but it's none of the recoveries have stuck. It's just stayed in this overall weak period. I wouldn't have this in my portfolio now. After had I bought into this strength even just in August, and this was like, I'm looking at this high from 21 August in that it broke to a new recovery high. So that was got itself back to probably close to a 12-month high, 11-month high. And so that was a sign there was some momentum. That was a reasonable entry point to go with. But then the results have come out. I'm pretty sure it's results driven, and it's just fallen. So I'd be inclined to say this isn't working. There's a lot of technical damage done. It's one of those stocks which hasn't played out. I just need to I'll cut it and move on. That's probably the way I'd look at this. Let's see, how far has it fallen? Like on a motion trader initial stop, there is more room in it. It's 25% stop. So you could get a case where it does sort of like then start to build a base around current levels. But I think the optimistic if we had an optimistic view on this, in that, okay, it's going to like stabilize at current levels, it's probably going to take time. So I think the best case scenario will be the losses. There may not be more downside, but there could be quite a bit of time for a new basing period to develop. So for me, I'd be saying, well, I don't want to give it time. I use a 3-month or 60 trading day time stop. With this much technical damage done, I think it's going to take go through that period. So I'd be inclined to say it's not working, I'll move it on. But there's nothing wrong with persisting a little bit longer. If somebody bought this recent breakout, if I was in at higher levels, well, I would have been out by now. We don't have momentum in this stock at the moment. At best, I think it's going to take time.
It's a good point you bring up once again around the time exit. And we had this conversation last week as well when I mentioned how I had some stocks in my hit and hope portfolio for about 3 years that were about 80-90% down. I think I did make the decision to have a bit of a spring clean this week, and they've now been removed from the portfolio. I have a little capital is left from those few stocks. At least I know it's free. It's given me this feeling of freedom where I can now reinvest that and hopefully some stocks with momentum rather than being there forever and ever and not doing anything and seeing those red in my portfolio that shouldn't be there, right? So I think it's a good point having that 3 month. If you're in the negative after 3 months and it's not going anywhere, if we're not getting emotional about what stocks we hold, this is a system where we don't have a a bias on the company because of what it does. It's the ones that make us money that gives us all the gains, right? So it's
like everyone's got to work out what they're doing as well. Like, are they like they active medium-term investors? Are they long-term buy and hold? Like, if you're long-term buy and hold and you've been holding Woolies since back when it broke higher in 2000, and like you wouldn't be looking to say, look, I'm just going to give it 3 months because it's going to take time, because that's not what you're doing. You're holding you're taking maybe a decade or multi-decade approach, and that can work really well for some people. They're collecting dividends, they're in stocks that over time do well. I think that the challenge for anyone who says, look, I just buy and hold, is like it works well when you're holding the right stock. Like even through that was like a 10 or so year period where it effectively went nowhere, but it paid dividends during that period, and that's okay. It then resumed the uptrend. But you get other stocks which they may have been great once, but then you look at a chart and for the last 10 or 20 years, they've been in a long decline where they might lose 80% or more of their value. And that's the challenge with just hold no matter what. Like, when do you decide, okay, enough's enough? But yeah, in terms of woolies at current levels, I'm always talking from the perspective of an active investor, someone with maybe a 1 to 3 year time horizon. It's not to say that would be the right sort of general suggestion for someone with a longer term horizon. You've got to work out what you're trying to achieve, and then you build your strategy accordingly.
Fantastic point there, Jace. All right, let's have a look at Steve, please. AAR. Sorry, AAR.
Yeah, uptrend still in place. I'd be happy letting this one run. Entry opportunities back when prices, above the averages, consolidated into them, broke higher again. I'd be happy letting this one run. It's low price stock. Never know with these ones what they're going to do. We could be the equivalent of this point in time from this earlier period where it's had a good run, then it starts to come back. So I always have an exit strategy in mind with these, particularly with these low price ones. But at this point, there's upward momentum. Happy to see where that takes us.
Okay, fantastic. The next one from Stevie's RZI.
It don't really have a dominant trend in place at the moment. We've got a potential, is it like, is this like a potential rounding bottoming phase, which is still starting to gain momentum? Like, for me, this isn't a standout because we're still kind of waiting to see, is it really going to get momentum? Like, maybe it's saying a step higher. So we've had a rally, then a pullback, a rally, then a pullback. It really needs to hold the line here and now have another rally, and then with that rally start to gain some momentum. If I was holding this, I could give this, particularly for more recent times, like if I'd bought the recent break higher, I could still be holding this. It'd be above a wide initial stop, and it would be within a time frame for holding. So, if we'd looked at this and said, okay, let's buy as prices are rallying off the moving average, breaking into new highs, that's a valid entry point. And I want to back lots of setups like this that have this sort of general appearance to them, and some of them aren't going to work. Some of them will do okay, and some will shoot the lights out. But we don't know which ones they're going to be until we look back. But it's all about finding the structure and making sure the risk reward stacks up, and then having lots of relatively small bets. That's essentially what it is. And so with this one here, it's like it's given back those initial gains, which isn't a strong sign for me. But it is now holding support. If it can hold where it is now and start to move back higher, it could come back into play. I wouldn't want to buy it at this point in time, but it'd also be where I'm also mindful. Okay, where's my initial stop, and how much time am I going to give it to perform? So I think it's doing enough to keep itself in a portfolio, but it needs to start showing it can gain and maintain momentum.
Okay, fantastic. It's a bit of a general question. We'll have a breather from the tickers here. Lloyd would like to know your opinion on short selling, Jason. It's a very open-ended question, but I can't answer why Selfwealth doesn't offer it at this point. I don't have an opinion around it, to be honest, Lloyd. But if you wanted to send an email to us, and we can certainly provide this feedback for the platform, obviously. But what's your opinion on short selling, Jace?
I think it's too hard for most people. It's just like looking at this stock. Like, you'd look at this and say, "Oh, look, that was a straightforward downtrend." But now look at this rally. That is a 58% rally. So when we look at it, people just see the big sweeping downtrend and go, "Look, how easy was that?" but you got to sit through a 58% bear market rally. Like, people struggle to sit through a 20% pullback in a rising uptrend. How you sit through a 58% bear market rally? And that's not an oddity. That's commonplace amongst big downtrends. You get big bear market rallies. The mass also doesn't work in your favor, because the most you can make is if the stock goes bust and you make 100%. Well, you go, well, that's pretty good, but most stocks don't go bust within the time frame that a short seller is operating. And when you look at the buying stocks, it's open upside. A stock, there's no actual limit to what a stock can go up. So, it just works. The mass works better buying than shorting. You also got the other, like and it's typically limited to the larger stocks, and the larger stocks are some of the best dividend payers. So if you're short CBA, it's for example, it's a regular high dividend payer. So you've got to kind of pay back the dividend. The dividend gets paid, and you're, as a short seller, you don't get the benefit of the dividend. You've got to give the dividend back. So it's just harder to make money. All the systems I've seen over the years, they make their money being long, whether they're trading futures markets or individual stocks or indices or commodities, whatever it may be. Most systems tend to make their money on the long side. Shorting's just a hard game.
Yeah, we actually did a show on short selling about a year ago, even though we don't offer it. We did a bit of an explanation around it about a year ago, Lloyd. So if you wanted to go back, I'll send you the link by replying to your comment. You can have a review of that full show on short selling, actually, if you wanted to. All right, Glenn, FAL, please. Got in and out last week, so that's good. Good on you. Made some money from it. Fantastic.
Okay, FAL. Well, look at that. That's a nice rocket ship ride, isn't it? It's wonder where we got in, and with these stocks, like if you're in at a low level, you're in at like 15 cents or so, and you get up to over $1. You're up a few 100%. We've talked about this in the past. I think it can be a good idea just to take some off the table. I like to let a portion continue to run. But that's an outstanding result. Well done.
Okay. Let's get on to the next one. Russell, PPS, please. Oh, we've done PPS. Let's do CNI. CNI.
Yeah, it's the possibility of like a multi-year base, which is now breaking higher. I'd be happy to have this in my portfolio. See where it goes. It's a motion trader stock. Signal. I can't quite remember when the signal was, but yeah, I'd be happy running this. If I was looking to get into it, maybe I'd just see whether we get a consolidation around current levels. Let the moving averages catch up a bit, and then maybe buy the pullback to the averages, providing it's not a deep pullback. If it's a shallow pullback while the averages catch up, I'd consider buying that, or consider buying a breakout to new highs. But if I was on board, happy to stay on board and see whether this is the basing phase that leads to that larger recovery.
Okay, fantastic. WAM, Lloyd wants us to look at WAM.
M or N?
M for Mary.
Yeah, look, same sort of thing. With this one here, I've actually think I've got it. Like, you can see all these falls in the share price, and that's going to be dividends being paid. I'm going to press this adjust button. It's going to put the dividends back in. You can see this has been a strong performer. I'd be if I was holding this, I'd be happy holding this. I think sometimes with these big dividend paying stocks, you need to like when you look at it without the dividend, you say, oh look, this has done nothing for 2.5 years. But it's not quite accurate when you see like how it's performed with the dividend. It's typically not the sort of stock I target myself. but that's not to say that's not a bad thing. It's just I tend to focus on the individual stocks rather than I think this is an LIC, perhaps listed investment company. I could be wrong, but yeah, this would be. Yeah, I'd be happy staying in a stock that's doing this with dividends. And when we take the dividends out, maybe it looks like it's even breaking above these recent highs, and maybe getting some upward momentum back. So yeah. Look, it's been a nice play over the last couple of years, and that's disguised by the distributions.
Fantastic. Confirm that's a breakout there for you, Lloyd. Rodney, KYP.
Yeah, another low price stock which is running nicely, and it's been a nicely behaved uptrend. It's not spiking and jolting. It's just this steady progression. It's had the shallow consolidations. I'd be happy staying on board this one and seeing what comes of it. It's only been around for less than 10 years, but look, you never know. Some of these low price stocks do become something. And as I've said in the past, like as these trends extend, sometimes I'll look to take a little bit off the top. But this probably, depending on where someone's in, if someone's in at 12 cents, it's up only a bit over 100%, which is great. But I'd be inclined probably to be letting much of my position run at that point. So once things get up 300, 400, 500% plus, I look to take maybe a little bit off the top. But yeah, that looks good. I probably wouldn't be wanting to buy it at current levels. It looks a little bit extended above the moving averages, maybe some consolidation coming, but there's an upward trend there, path of least resistance higher.
Fantastic. Hassan, how you going? QOR, please. QOR.
Yeah, it's nice recent breakout above these previous highs at around 51 cents thereabouts. Trends up. So far, the pullback looks corrective. It's shallow. Looks like it's being supported. Might need more time to consolidate while the moving averages catch up. But I'd be happy staying on board this one, and if it can just continue to hold those gains for another week or two, let these averages catch up. Maybe it's a buy the dip, maybe it's a buy the breakout. A trend I'd be happy staying on board.
Nice one. IMD.
Yeah, and this shows how things can change. So it's this had been a nice trend, but then it's quickly given back those gains. The trend is still in place, notwithstanding the sharp decline. And we sometimes do see sharp reversals from highs where the trend ultimately does continue. I wouldn't want to buy this dip at the moment because I don't like how quickly it's come back. If I was on board, particularly from lower levels, I'm still on board, and I've got a wide trailing stop, which is still probably quite a bit below the current price. If I'd bought this recent breakout, I'd be looking at it differently. If I bought the recent breakout, I could be saying, look, maybe I could give this a little bit longer, just below the 100-day moving average. But then I'd be inclined to say, look, I bought it because prices were breaking out from this consolidation, and I thought things were going to start trending again. And now instead I've got this quick decline. That's not what I signed up for. So I'd be inclined to say, look, I can give it a bit longer. It's got to hold, really get a toe hold in now and start to, even if it takes a bit more time, maybe it develops another wider range. But I'd want to see the losses stemmed here, and much more weakness, I'd then close it out. But you can see I've got two different strategies, one for a recent entry and one for an earlier entry. The earlier entry, I'm giving it lots of room to move because I know we're going to get these periods like such. We usually do anyway in a lot of these stocks. But if I got in later, I don't want to hang around for too long if it's not doing what I thought it was going to do. So then I'm more inclined to move it on and move to the next opportunity.
Okay. Neville, love the show. Thank you very much, Neville. RMS looks to be an uptrend, and is it too stretched above the MAs to buy?
Yeah, I'd probably struggle with it now. I talked about this 2 weeks ago on the on my Friday strategy session, because I bought some. I bought some on the Thursday the 21st, just near the close. As it was breaking out this little consolidation, you can see prices got back above the averages. We had that classic shallow consolidation. I like price action on the 20th, where prices opened. They traded down to their low, broke below some previous lows, but then closed up near the high. And then the next day we had that strong upward move. So I thought, okay, I'm going to get back on board, because I had some of this, and I'd sold out when prices were below the moving averages and looking a little bit vulnerable. So yeah, I'm flexible with my thinking. I'm not like, I don't want to give up on a stock if it's not doing what I think it should do. I'm happy to give up on it, move somewhere else. But then if it can start doing the right thing, I'm happy to go back in. So I'm not. You wouldn't say I'm a loyal stock follower. I'm pretty fickle. If they're doing the right thing, I'm staying. If they're not, I'll move on. But then giving them room as well. So it's not like, I've got a down day, I'm going to get out. It's like, once I've got some gains built up, give it room to move. But if it's not doing the right thing, move it on. But so I spoke about buying in a couple of weeks back. It has really extended now. It's stretched above. I agree. It does look like it's stretched above the 50-day moving average. It's a bit tricky because gold's breaking higher at this moment. So if we look at the gold price, gold is currently breaking out of a 5-month range. So and gold isn't stretched above its moving averages. So I don't know. I don't know how that plays with the stock, with many of the gold stocks now. I'd struggle to buy it at current levels. I'm more than happy holding what I've got. But yeah, it's a little bit more difficult after it's run. I think I'd struggle to buy some at current levels. Like, the question is, like, where do you put a stop loss? So say it was bought at current levels, so you have your stop back. Like, it's like 20% back and gets you below the 50-day moving average. So yeah, maybe it could be bought. I guess if it's bought at current levels, you just got to probably do so with a wider stop. And but as we often talk about, my preference is rallying off the moving averages, not after they've been rallying for a bit. But a stock, I'm happy being on board.
Okay, FWD.
Trend in place, I'd be happy staying on board. Yeah, look, rallying off the moving averages, even like, I guess, considering like, I was going to say it could be considered to buy at current levels, maybe just like a 15% stop back below the moving averages, not too stretched above for the sort of price action this does. But if the ASX does continue to consolidate, maybe this consolidates too. Maybe it's just one I'm happy to stay on if I'm on, and whilst it's below this high from Wednesday last week, maybe just see whether whether a bit more of consolidation develops, and that could provide the platform for another entry.
Okay, fantastic. The next one is from Kyle, TUA.
Yeah, I had this a while ago, and this was a great motion trader stock, great one in my portfolio. Rode the uptrend, did really well, and then we had this sell off, and it's one of those disappointing ones where I sold near the lows. The trailing stop went off, and I'm out near the lows, and now we look at it now, and it's up at new highs. But that's going to happen. Like, trailing stops don't work like magic in that they only go off when a bear market's starting. Sometime you just get clipped out at the bottom. sometimes you just manage to stay in. So, but for me, it's about being consistent, using a calculation. It just saves the guesswork and the emotion that comes with trying to just figuring it out. So for me, I've got that clear cut calculation. I got knocked out. I didn't get back in. I've gone off and done other things. But if I was in this stock now, I'd be happy holding it. Trends up. It's above the moving averages. Moving averages are rising again. It's now had like a multi-month consolidation. So big uptrend, multi-month consolidation, breakout to new highs. So trend is up. I'm wondering, buying at current levels, I don't know. I don't know. I just wonder whether it needs a bit more consolidation of that big gap higher. But yeah, I'd be very much happy hanging in there if I was still in there.
Okay, XRO.
Yeah, it's becoming vulnerable below these moving averages. Averages have crossed. It's now making new lows below the moving averages. Like, had I been on this earlier trend, I would have been stopped out during the April sell-off. So I would have been stopped out during that. Had I then, re-entered as prices were breaking higher again, I'd now be having to say, look, again, this is not working. I'd be probably looking to close this one out. I certainly wouldn't be buying it. It's not a dip I want to buy. If I was in there now, I'd be thinking, okay, I've got to work out what's my exit strategy, how much more room am I going to give this to turn around. Like look at this period over here in 23. We do get these periods where just because the stock's below the moving averages and the averages cross doesn't mean that it's going to fall 50%. Sometimes it's like it has its washout and it's all part of a broader consolidation, and then upward momentum can resume. But it's like sometimes it doesn't. It builds that vulnerability and then completely gives way. So that's why I say we don't know. Are we here? Or are we here? And you're not going to know until you look back in 6 months' time or so. So I'd be saying I want to think, where's my exit point? Because I don't want to get stuck in the 2022 version, but I want to give it enough room to try and see it off if it's like we saw during 23. So I could give this a little bit more room, but it now be it's on the it's in the exit line. It's just where I'm going to trigger that exit for it. I personally don't know. I don't know. It's like I'd be using a motion trader stop loss. Had I bought on a breakout, I'd be looking at my motion trader stop loss and going off the calculation. It's a difficult situation because you can see how both scenarios can play out. But have that line in the sand where you say enough's enough, and if it turns out like TUA for me, well, they're going to happen. But if it turns into a bigger bust, you look back and you'd be glad you were disciplined and you cut off a loss before it got out of control.
Yeah, I think it's just a great point to have. Once again, it's that discipline and in control, because it's the same with me with TUA. You look at it and you go, well, it could have just completely gone the other way on you, right? So if you look at it that way, then it makes the fact that you're looking at a chart and you could have made a lot more money from it easier to take, right? So you never know. It's always generally a 50-50. So
we can't look back and say, oh, look, I should have held TUA, but then you look at a situation like XRO in 22 and go, oh, but I should have sold XRO. You can't say I should have held one, I should have sold the other, because if you go and do that, it means you don't have a strategy, because you're just shooting from the hip. I'm going to hold this one, I'm going to sell that one. There's no process. It's not repeatable. Unless you got without some sort of systematic approach, it's not repeatable. And then if it's not repeatable, then you're flipping coins, and that's in which case you should go and do something else. It's not, the stock market's not the place for you, because coin flips won't work over the longer term. You've got to have a rigorous process that you can apply consistently. Anything less, it's like you're a long-term ETF investor, or you do something else. It's like, we can't be saying, yep, I would have got out of this one, but I should have held that one, when you look back with hindsight, because it doesn't work in real time.
Yeah, hindsight's not a strategy. IGO, please.
Maybe there's the early stages of something developing. It's like the same with Liontown and Chalice is another one. It's like there's the signs that something could be developing, but it may not. Also, I think this is a really important level where things are now. It's back on the 50-day moving average. It's really got to hold the line here. If it quickly finds itself back down below the 100-day moving average, I'd be saying this isn't working. I'd be packing up and getting out. If I'd maybe bought this break to new highs, or if I got this, bought the rally off the moving averages. If it can't sort of get a good foothold in here, ideally I'd want to see this like get its foothold, then from there we get the break higher. That's the sort of price action I'm looking for, and which could develop from current levels. But instead, if we get more of this, I'd be inclined to say, look, we've had good gains. It hasn't been able to hold on to them. It's not showing that tendency to sustain momentum. I'd probably close it out and move on, like I was telling you I did with Elevate EL8 a while back. Bought a breakout, it didn't play out, so I just moved it on. Now look, it looks like maybe it's coming back, but I'll give it time and see how the price action looks. But I think this one here, there's certainly potential there, but I think a lot hinges on can it like lock in, build that base around the 50-day moving average, or is it going to tip to the other side? One to watch. Potential's there, but it's got to really start to deliver on that soon, I think.
Okay. TCL.
It's a bit of a messy upward move. It's like when we look back further, it's really been range bound since just after COVID. It's paying dividends and things along the way, but just from a share price perspective, it's still within this big overall range. There's probably going to be resistance which comes in, thereabouts. So it's just butting up against the resistance. Looking at its pathway higher, it's a pretty messy sort of advance. It's like it's not like it rallies and then pulls back to the moving averages, consolidates and rallies again. It's got this tendency to come back below the moving averages. So it doesn't have the strong underpinnings of a trend at the moment. Look, if I was in this one, and if I'd bought in, maybe I'd bought in and say I bought in April as things were breaking higher, wide initial stop, saw off that pullback, it's up at new highs. I'd stay in there and see whether it can continue to build. Let's see what this pullback looks like. Maybe this pullback does a better job. If this pullback can hold on to more of its gains and the moving averages catch up, maybe it could start to develop into like a stronger like stepping pattern where it then does start to gain momentum. At the moment, it's not really there. It's sort of like no problem holding it, collecting dividends. It is generally moving higher in a messy way, but for me, it's not it's not really a standout at this point. And then we step back. It's still locked within this big range, not without potential. But for me, it's not a standout structure at this point.
Okay, we've had a look at gold quickly, but did you want to have a look at silver as well from Zane?
Yeah, okay, we can have a quick look at silver. And new highs recently, overnight, new highs. So you can see I've spoken about it before. I've already got stuff on there. This would have been about buying breakout. So buying a breakout back in April 24, buying a breakout more recently is, it's been a profitable exercise, like identifying the consolidations and buying the breakouts. Let's go to a weekly. We get a bigger perspective where silver is. The great 70s silver spike, big whole story with that for another time. And then there's the big run up in 2011. And is this going to be the third big run in silver, which maybe takes out these previous highs? I think the potential is there. I'm long silver. I've got a ASX listed silver position. It's a silver ETF, and I'm happy holding that. I like the way the rally is developing, in that it rallies, it consolidates, rallies, consolidates, rallies, consolidates, rallies again. I tend to find they're more sustainable than things that just, rallies that just shoot higher and then they can just quickly come back down to earth. So spoke about this. I was talking about this, and I'll just show you where did I buy it? I think I bought it here in June. So I was talking about this, and again, in the Friday strategy session. If you like this stuff, Friday strategy session is the place for you. It's I was talking about buying it as it was consolidating on the moving averages. It looked like a corrective sort of shallow pullback, and then we got some upward momentum from there, and it's developed nicely. So, but it was a good risk reward place to buy, because I could just do it with a relatively close stop loss. So asymmetric in that, open upside but limited downside. At current levels, it's not quite as asymmetric as it was when you had that tight trading range. Nonetheless, we could say that it's breaking out from. Could almost say that there's another sideways consolidation into the moving average, and it's just broken higher. So I think there's probably more risk with buying it at current levels, because the stop loss then probably needs to be back down. Maybe back down below the 100-day, below the 50-day moving average. Maybe it's about 9-10%. You think 9-10% doesn't sound too much, but it's not a leveraged position. So, like, how much is silver going to go up? If you got 30% in a year, it would often be a good year. So risking 10% to maybe make 30%, it's like it stacks up. But it's the risk is probably relative to the reward. I think silver's got further upside potential. As I say, I'm happy to stay in there. I probably wouldn't. I don't like chasing gold and silver on big up days. I'm inclined to get them on pullbacks. But as we just went through, there's probably a strategy for buying it at current levels, having that 10% stop, and seeing if it develops into something. With gold looking like it's breaking out the last couple of days, maybe silver will have a run with it.
Okay, Telstra from Sanjesh.
Look, uptrend. It's consolidating. It's been consolidating for a couple of months, just around the 50-day moving average. It's a motion trader stock. If I had some, I'd be happily holding it. I don't think I'm in a hurry to buy it. Looks like maybe there's some more consolidation coming. I'd probably be inclined at this point to watch it, just see how the consolidation develops. Maybe buying a higher, maybe buying on a break of the August high. But if we get a nice sideways consolidation, get a platform developing, there could be a buying opportunity in the weeks or months ahead. But certainly one I'm happy holding.
Okay, fantastic. A couple from Irfan. We've got PME.
Trend remains up. Pull back to the averages. I'd be happy staying in there at the moment. Look, probably not in a hurry to buy it at the moment, but and also depending on where I bought. If I bought the most recent break to a new high, my strategy is different than if I've been in from much lower levels. But for me, I would have been stopped out during this big decline during March, April. That would have been enough to trigger my trailing stop. So it's not a stock I'd be in with a lot of profit at the moment. If I was in it, would have been more a case that I would have been getting in more more around current levels. In which case, look, I could give this some more room back below the 100-day moving average. Ideally, it starts to develop some support around current levels. But if it starts to give way, I'd also be just as happy to close it out if it's not doing. If I don't have much profit built into it and it's not showing momentum, I probably wouldn't give it too much room below the 100-day moving average.
Okay. PMV.
It's is this at early stages of a recovery? It could be. It's still a touch early for me. I do like that it's consolidating on the moving averages. Moving averages are close to crossing, so I want to see the 50-day get above the 100-day. So the 100-day is blue, the 50 days red. I want to see the red above the blue. But that's close. But that could still be 2-3 weeks away. Maybe some more sideways consolidation, and then probably a break to a new high. Maybe a break above the August high would be some momentum and trigger a signal into the momentum maybe. I probably wouldn't be preempting a turnaround if I was buying at current levels. Look, maybe 12% of risk, a stop below the July low. But yeah, I'd like to see the moving averages cross. It's just a little bit too preemptive for me at the moment, but it's one to keep an eye on. There could be a trade there.
Okay, the next one's from Hubert. S32, please.
Well, this hasn't been performing with some of the other mining stocks. It's been a disappointing one. It continues to trend lower. The moving averages remain in decline, and it's close to making a new low. We'll generally say there's a series of lower lows here still. It's not its time. It wouldn't be in my portfolio. If I'd punted a recovery, a turnaround like a few weeks ago, prices rallied towards the moving average, pulled back, then started to rally, I wouldn't have bought that breakout because the moving averages weren't in the right position. But say I had, it'd now be at the point where I'd be saying this isn't working. I just want to take a relatively small loss on this one, and rather than hold and hope that it is going to start working, I'd be saying, well, it's not working, so let's just keep the loss small, move it on. If it comes good and starts breaking up towards $3.30, well, we can come back and have another look at it. But at the moment, it's not moving in the right direction. I think the risk is that could it break below the April low? It certainly looks like that's a. If I was going to say which one is it going to break first, is it going to break the July high or the April low? I think I'd have my money on the April low. And that's simply like putting the probability on the side of the trend at the moment. That trend's down. I'd leave it alone.
Okay, WDS.
It's an interesting one, because oil is just as oil's not giving us a lead at the moment. Oil's a mess. Woodside's now on the good side of the averages. The averages are trending higher. It's had a nice run off the averages. We're getting a consolidation with the averages catching up. So it's like it's doing something different to the oil price. If I had some Woodside, I'd be inclined. I'd stay with it. I actually do have some Woodside. I've got some Woodside. It was spun out of a BHP position, several years ago. But it's not. It's just not an active position. It just sort of like sits in my portfolio. It's relatively small. But if I had a meaningful position, and maybe I'd bought the rally off the moving averages or something, I'd be inclined to give it the benefit of the doubt here and stay in there. I probably wouldn't buy this dip. I'd probably rather buy a breakout because it's not, it's not following. The oil price isn't chipping in at the moment. You can see there's some overhead resistance coming in at around just above 27. So probably I'd consider buying a break above 27 and saying, okay, this momentum, it's early momentum, come back, it's rallied again, it's consolidated, it's breaking again. I'd go with that, see what happens. Have a stop below the 100-day moving average, see if it develops into something bigger. So at current point, I'd be happy holding a position. I'd be happy to consider a position on a breakout. And at this stage, we're playing the makings of a trend. I wouldn't say we have an upward trend in place, but there's enough there to suggest maybe there's one developing.
Okay, we're going to get on to Fred's CRI. So just in the interest of time, guys, we'll get on to 2 tickers from everybody, as much as we can, obviously.
CRI, low price stock. Is this a basing? Look, it's breaking out. It's breaking out from a sideways period. There's not a trend here. If someone likes this stock, well, yeah, buy the breakout, and can we manage the risk around it? So at current levels, it's like this, and this is a challenge with the low price stocks. Do we want to give it over 30%, which I think it needs? I think if you put a stop at 20%, it could get stopped. You could get stopped out in just a day-to-day volatility. I think it probably needs that 30 to 40% stop, well back within the range, and that's probably too much for me to want to play. So I'd be inclined to leave it. If we get another consolidation, sideways consolidation, moving averages catch up, we might be able to adjust the risk settings. Maybe it stacks up. But if I'm already in it, I've got this little break higher, let's see where it turns into something. As always, have an exit point. But there's certainly it's gone from below to above. It's gone sideways, so there's a base there, and it's broken higher. So there's enough there to say there could be something that develops. You just got to manage the risk around it.
Okay, fantastic. Peter, hello. IGL, please.
It's bit of technical damage done with the sharpness of that decline. It has snapped back. I think just measure how far that is. So a motion trader trailing stop. So had we bought this breaker, say we bought a breakout around February, that would have been triggering a motion trader signal around then, I think. Had I been in it, had I bought this back in February, I'd still be in it. We've got an upward trend. A wide stop would have seen this off. That's about a 20% decline. A wide stop would see that off. I'd stay with it. I'd stay with this trend, because trends can be volatile. Trends can be hard to stay on, as we've seen with previous incidents with this stock. You can have those large pullbacks, but that can be within a bigger upward move. So there's nothing to say that this can't stabilize and continue higher. I wouldn't be a buyer at current levels. I'd really want to see it show good signs of stability and moving higher again. But if I had it, and I had it from lower levels, I'd be holding it. If I'd bought it at later levels, I'd be inclined to shut it down. I'd say, look, I bought it on the basis that we had an upward trend. It's come back. It's got pretty ugly. It snapped back. I'm only down a little bit. I might just wrap this one up and go somewhere else. So again, it depends. Where's my entry point? Is it not long ago, or is it quite a while back? A while back, I'm holding. Recent entry, I'm probably looking to move it on.
Okay, next one for Peter. Zip, ZOP.
Trends up, new recovery highs. I'd be staying on it. Probably wouldn't be buying it. It's had a bit of a run above the moving averages. But one I'd be hanging on. It's a motion trader stock, but it hasn't been in there for too long, because it also was a motion trader stop stock, and it got stopped out during the recent sell-off. But yeah, if I was on it now, I'd be happy to stay on there.
Okay. The next one is from Digby, 4DX.
Yeah, nice shot higher. I'd happily stay on. Yeah, I wouldn't. It's a tough one to buy now because we're stretched above the averages. So if I wasn't on, I'd probably have to wait for the next consolidation, see what it looks like. But yeah, if I was on it, I'd very happily stay on it. I'd have a wide trailing stop. My stop would be, it's back down here, back in the mid 40s somewhere probably, or even lower, giving it lots of room to move around. And a lot of people, they'll jam their stop up to like 66 cents or something like that, just below the low from the gap higher. You're going to find it very difficult to catch big multi-year trends if you're jamming your stop right underneath the share price. Got to give it plenty of room to move. And I know it's a bit of a scary thing to do, to get a big move and have a stop all the way back down near the 50 or 100-day moving averages. But that's how you can potentially get large trends. So I'd be staying in, giving it lots of room.
Okay. The next one is DYL.
So uranium, I think this is probably the best of the best performing of the local uranium plays. It's up near its highs from is it all-time highs? It could be up near all-time highs. Well, at least from the last few years. So this is the best performer. If I had this one, I'd be keeping it in my portfolio. It's performing fairly well from a global perspective. When we look at the uranium stocks, I think it's probably one of the better performers. Question is, do you buy it now? And I think that's a harder question. I think if we take the view that the uranium price is turning around, buying it at current levels with like I gotta say, would you put a 25% stop on it? And it certainly could, but then, what if this turns into like, a larger trading range over the next few months? You could get a situation where it does falls 25% and then gets back into the range, and it's just difficult. So I think it's a hard one at current levels in terms of like the maximum sort of stop I'd want to use. I think is still within range of price action, which is reasonable, which could happen. So I'm probably inclined not to buy it at the moment, but to watch it. If we get some consolidation, we might get some better setup. But if I had it, I'd be happy staying in there.
Okay, last few now, Jace. Jesse, ARD, please.
ARB?
ARD for Derek.
Oh, D. Yeah, a little bit like one we looked at not too long ago, in that, well, probably there's probably more of an upward bias on this one. More rising lows, moving averages are gently moving higher. Seems to be getting a bit of an upward break at the moment. Like maybe this one could be bought at current levels. It's highly speculative with a 25% trailing stop. Like it looks like it could be staying to break high, but then we get these. But it could then also like come back down and more sideways as well. The problem is if we don't sort of buy around current levels and then it's quickly at 3 cents, then the problem's going to be, well, then now where do I put my stop? Because I need to give it like 40%, so the whole thing doesn't start to stack up. I think there's some potential with it. Will it accelerate? We don't know. It hasn't really broken out of this range yet, but I like the upside move over the last couple of days. It's people will decide whether this is the sort of thing for them. and it's difficult due to the movement you get in the low price stocks. So that's one play, buying at current levels. I wouldn't say it's a high confidence play. Stop below the August low, and see if we can get more of a break, get some more momentum. One of those stocks which could run a long way, or could just continue to meander.
HRZ.
I'd probably want to give it a bit more time. There's some potential with it. We could say, look, it's got a series of rising lows, rising highs. It's had a big consolidation period. It's back above the moving averages. I'd just like to see it establish above the moving averages. We've got that sideways movement while the moving averages sort of caught up and crossed. That could be an entry point. A break higher from such a pattern could be an entry point. Probably wouldn't rush to get it today. I'd be looking for some more consolidation. But there is the potential that it does start to turn into something larger. And it's if we can manage the risk around an entry point, to say we got that sideways consolidation and then had a stop just back below the 100-day moving average, it might stack up as good risk reward. So I think a bit more price action needed.
Okay, and the last one we'll take from Dale. It's his first time watching a live show, so hopefully you're still watching, Dale. Thanks for watching the recordings. BB1.
BB1?
Yep.
Lots of stocks I've never heard of today. And this is there's an uptrend, higher lows, higher highs, rising moving averages, price above the averages. If I was on this one, I'd stay on it and see how this trend develops. If I was wanting to get some on board, I might just see whether this recent pullback gets a little bit more consolidation. I'd probably be inclined just to watch it. If I wasn't on board, I'd be inclined just to watch it and just see whether we consolidate below these recent highs for a little bit longer. We could also get like a larger range develop. But if I was on from lower levels, by all means, I'd be staying on and seeing whether this trend develops. It's only been listed for a little over a year and a half or something like that. So not a great deal of price action to it, but there's enough the basics of a trend are in place, with the rising lows, rising highs, moving averages and such. So, it'll be an interesting one to check back in on in weeks to come.
Fantastic. All right. Well, we have plenty of other tickets to go through, Jace, but we're going to run out of time. Obviously, we could be here all day. Thank you, everyone, for your tickets. I want to say, to your point, Jace, there's been a lot of fantastic ideas for people out of this show, out of other people's ideas, right? So one of the benefits of this show, even if you're not that much into technical analysis, is idea generation, right? So it's fantastic to have everyone come week in, week out and be able to do it. Obviously, it's general advice only. We provide everything you do must be relevant to what you want to do, obviously, because we don't know your personal circumstances, as everyone knows. Otherwise, thanks, Jace. Thanks for another great week.
Thanks, Rog. Thanks, viewers, for all the stock codes. Hopefully we did an interesting show for you today, and look forward to coming back. We'll do it all next week.
And I've confirmed next week will be our 2-year anniversary show. So please do come and say hello at our 2-year anniversary show. And I'm going to say it, just smash that like button and leave us a comment in it. I've heard other people say it on YouTube, smash the like button. So smash it. And hopefully we'll see you all back next week. Thanks, everyone, and have a great week. Bye-bye.